So thank you very much for this very excellent insightful comments. So actually, so how to involve the untapped resources in this capital market is quite key. So to develop this SME capital market, so SME rating agency and the other supporting professionals is a quite important segment. So to be supported by the government. So also ADB will consider this potential of the supporting such as supporting infrastructure for developing this SME capital market in the future. Okay, so let's move to this second question segment. And this is some more concrete discussions about the fundamental difficulties of SME financing for these capital market related matters. So constraints and challenging on existing SME capital markets. So would present capital market be places where SMEs can raise growth capital? So this is the very difficult question to, but it's very important to confirm the current conditions of SME capital market. And the second one is there a demand on SMEs for capital market financing? Also, is there a potential investor base for SME capital markets? So is there any operational constraint and challenging at the present capital market for SMEs? And the regulatory supervisory constraints and the challenges. So I would like to ask you of your past perspectives of these constraints and the challenges on existing SME capital markets. In this case, BSE SME platform, and so also concerning the future constraints and the challenges. So please.
The first question, obviously, whether we have a capital market for where SMEs can raise growth capital. So obviously, people have GEM or AIM markets, and we created an SME platform which started from last year. So that is what basically has created that platform. Is the demand on SMEs for capital market financing? SMEs definitely have demand for finance, and today, traditionally, they've been going through family and friends, and basically the next level is the bank financing. Now eventually it will evolve to the capital market. Right now, I will say we are still at a very infancy stage, and to a large extent, angel investors, seed capital, PE, VCs, all this kind of funding and all these kind of investors or professional investors will slowly start demanding that if it is listed on an SME kind of platform, they will want to finance those kind of companies. So that becomes an attractive point given the kind of tax ops, etc., which are there. The potential investor base, obviously it's growing. There is obviously a large number of angels and VCs who are registered and PE capital funds which are there, who invest in share of different kind of companies, including on the MSME. Obviously each one has different kind of impact, including the social capital market which you said, which again could be a very interesting opportunity. Operational constraint and challenge, yes. Today, most of the SMEs are pretty unorganized. So when they actually need to raise and take money from other people, then obviously they need to present financial statements, ensure that the corporate governance standard or the visibility on whatever their performance has to be there. And to a large extent, many of these are owner-driven kind of situations where probably these are all not maintained in a very proper manner, and that is something which definitely is an operational constraint at this point. So, for example, any company which wants to walk into the SME platform, probably they need to start cleaning up their accounts, ensuring that the financial statements are in place. So those are things which are clearly the basic kind of starting points. And in terms of challenges, obviously there are some challenges because banks today traditionally are typically the largest ones who lend money to the SME. But at the same time, they also have significant constraints in terms of being able to invest in the equity through the capital market route, because the bank funding to SMEs will be treated as capital market exposure, and already banks have tight control in terms of what RBI has imposed as the capital market exposure. And to some extent, like today morning also Mr. Raman alluded that there are certain moves which are afoot where basically some kind of an SPV or a special purpose vehicle could be formed where banks could in turn lend. which will be treated as SME sector or priority sector lending, and these in turn could actually invest into the SME platform companies, and that's the way one could actually look at doing it. Yes, at this point we're in an early stage, but over a period I think definitely these kind of solutions could be found out. And regulatory and supervision challenge. Obviously, there is an elaborate mechanism which has been put in place by the regulator, which had its initial share of skeptics in terms of whether the market making model will work. Because the challenge is basically ensuring a right balance between the cost of compliance and at the same time having the benefits of compliance in terms of transparency, in terms of better corporate governance and better standards which are there for these companies to be managed. And this balance is something which constantly we have been striking. As Mahavir also mentioned, it's like since this platform started, it's like 1.5 years, and over a period all the regulators have shown a huge amount of kind of leniency, or basically huge amount of understanding in terms of listening to the market and trying to evolve and change the kind of requirements. And to that extent we are right now in the fledging stage, and over a period I think these regulations will mature, and to that extent the challenges will also kind of mitigate.
Okay, so thank you very much. So I see there's a very huge potential of this developing this SME capital market in India. So maybe we need to develop this discussion further. So what is this most appropriate manner to develop this discussion? So this is also incorporated in our study reports to be published by end of this July. Okay, and then so moving to the third one. So market structure and product on SME capital markets. So as I mentioned during my presentation, when it comes to this social stock exchange, the most favored product and instrument would be equities and shares for investors. But we would like to discuss what types of capital market products would be appropriate for SMEs in the context of India. Still, equity might be promising instruments for SMEs, or bond markets might be room for developing further in the context of SME capital market or not. And also what type of market structures will be appropriate for SMEs. So we get already the answers from BSE and other colleagues. So exchange market and organized OTC. So both markets segments are very important parallelly to be developed. So we skip this question. And what type of market structure would not be appropriate for SMEs? So no appropriate answer, so we can extract in this discussion. But definitely, we understand both markets, organized OTC and exchange market, have advantage. For responding to the demands from SME issuers, and I think. More flexibly, we need to develop both types of markets further, and then we also focusing on this type of capital market product. And I would like to know your
I'll take the easy question, which is the third one. It shouldn't be like the larger exchange. If you have small investors participating in the SME, I think that would be self-defeating. The entire purpose of the SME exchange would be lost at this point in time. Maybe at some future date, you could have the smaller investors coming in. Mind you, on the larger boards, there have been small issues. I mean, small issues of the kind that may actually have made it to the SME exchange. And some of them have actually had wild price swings. So, there is a lesson in that. As the gentleman from SEBI said, there seems to be some wisdom, by design or otherwise, which is keeping the SME market afloat at this point in time. And so my feeling is that it should definitely not go the way of the larger exchanges at this point in time. The first two questions.
I think all questions are in a way interlinked. So a nice agree with the views expressed. Particularly, a couple of views which I would like to kind of put on table is regarding bond markets. Internationally, bond market is something which is very matured. Uh, uh, Relative to equity, they go hand in hand. But in India, somehow bond markets are not very matured. So when we are talking of SMEs, whether bond markets has to be kind of established, the answer is yes. But whether the time is right, I have my own doubts. Because when even we don't have bond markets for bigger companies, probably we'll have to wait for some time till the market kind of receives bond markets and related aspects. The stakeholders are ready and prepared for dealing in bond markets, and then maybe a step two would be to have bond markets for SMEs. As on date, probably bond markets for SMEs may not be a good idea as far as Indian markets are concerned. Regarding the other alternative structures, I think we have heard in the morning, and in fact I raised the question also, that whether it would make sense to replicate some of the practices prevalent abroad in terms of having organized OTC markets or pink sheets or structures like that. So while a lot of practices are prevalent somehow in India, and now there is a renewed focus and movement with market regulator and ministries across to kind of take a holistic view of alternative structures in India, and we are expecting a kind of new alternative markets for SMEs this year itself. So I think those are the two views I thought I'll put on the table.
Thank you. So as you pointed out, holistic view is quite important. So to develop this appropriate market product for SMEs, and so hopefully India has developed these discussions more holistic point of view. Okay, and so move to this fourth segment of the question. So this is more specialized questions for securities firms, because securities firms are very important to facilitate these capital market for SMEs, because the underwriting and underwriters and the broker dealers a very important role of connecting SME issuers to potential investors. So, but we have heard from other countries, many of these securities firms hesitate to tap these SME equity markets because it's costly and also not so profitable. So we got such a negative response from other countries. But we would like to discuss again. So here in India, so would underwriting and brokerage for SME shares be a promising business? So from a realistic point of view, and what would be constraints for securities firms to enter into SME capital markets? And what would be potential benefits for securities firms to enter into SME capital markets? So those are the very important set of questions of discussing the role of securities firms. Could you please give me your opinion?
Actually, I would like to throw open this question to some of the market makers and securities firms which are here. In fact, they will be able to probably give you a much more relevant kind of an answer.
Yeah, thank you for giving this opportunity. Yes, definitely there is a great potential for the security firms to enter into any kind of business with SME, whether it is underwriting or brokerages, or from that point of view of merchant banking. But the question is, when and how much? When you say potential, there is a great potential. But if you talk about present, it's not much. You have to spend more to get less today. But definitely when we saw to it that now in 1 year there are 24 companies, 25 companies if you take both the exchanges on SME platform. I think next 1 year will give minimum 100 companies. And if you take 3 to 5 years view, I can easily forecast about 1,000 companies listed on SME platforms of BSE and NSE, and then you can understand the kind of business which the securities firms are going to get. Secondly, the lot size or the trade size being more than 1 lakh rupees, that also gives a great potential, because the contracts may be fewer, the labor is less, but the amount which will be transacted will be more, as against maybe a 3,000 rupees or 5,000 rupees or 10,000 rupees a deal or a trade today. In SME, if the situation continues, the trade size or the order size could be 2 lakh, 3 lakh rupees, which is again a comforting thing as far as the security companies are concerned. So in my view, the potential for the securities firms to get into the SME business is great, even from the underwriter's point of view. You know, the underwriting commission is very handsome as compared to only the brokerage either in the primary market or secondary market. But it's coupled with the financial risk. Today you may say, yes, your money may be blocked for some time if the underwriting commitment comes on you. But as the things evolve, more confidence comes in from the investors in this stocks of this SME. I think as an underwriter, you might not have to take finally as a hit to take the stocks of that company, and the commission which you earn is huge as compared to, as I said, brokerage either in the primary market or the secondary market. So from that point of view, people should not feel shy, because today you might get some stocks in the hand. You might have to hold it for some time, but then it may also generate profits for you, and mind it well, as for Indian laws, it will be a tax-free profit if you sell it after 1 year. Thank you.
So very positive response. I was very surprised to hear such a positive prospect from the securities firms and intermediaries. So from a long-term point of view. So long-term point of view was quite important for investing and dealing with SME stocks and shares. So that's a point should be very elaborated in the SME capital market actually. Okay. And because of the time constraints, so moving to other sections. So now it's down to the discussion about this potential investor base. So what types of investors will be promising for SME capital markets? So we have already discussed the variety of types of the investors, like institutional investors, like pension funds and insurance companies, and the sophisticated investors, including the social venture capital fund or mutual fund managers like that. But in reality, just taking account of the context of Indian capital markets, what types of investors will be most promising for SME capital markets? So this is a realistic discussion. And present investors are different from desired investors in SME capital markets or not. So because this is the perception gap. So for between the investor side and the issuer side, and also with the market organizer side. So I'd like to know such kind of the gap, perception gap exists or not in investor side. And what would be done to attract investors to SME capital markets? This is a more fundamental issues. And which sectors of SMEs would attract investors? So for instance, ADB recently conducted the surveys regarding the social enterprises in India, and we see the very positive performance and the potentials of the socially oriented SMEs in India. Also, they have potentials to tap the capital market. So which segment and sectors of SMEs would attract investors in the capital market in India? And if somebody from investor side there in the floor, so we would like to ask how much or what percentage of your funds would you invest in SMEs actually? Okay, thank you.
Ashok to probably take it.
Yeah, fine. Okay, I think the answer to the first one is we definitely need financial institutions and banks investing in SMEs in a bigger way. Are present investors different? It's very nascent and difficult to say at this stage whether you have a limited number of investors and they are definitely participating. Once again, I think with the participation of financial institutions and banks, this would grow to be much bigger. The third one was, I think, one of the questions that we addressed earlier, what are the kind of policy measures, and there could be tax measures, there could be instructions to the financial institutions to participate in these markets. Which sectors of SMEs would attract investors? I think my experience tells me that investors are not particularly choosy about sectors. They chase returns. So any company or any business that looks like it would deliver good returns is where the investors would be. Of course, there are fads at different points in time. We have seen that with IPOs where you had a realty boom and you had an infra boom and that kind of thing, which may happen here too. But at the end of the day, I think it's those money-making IPOs that investors would chase. I mean, it would obviously be their perception that it could make them a lot of money that would get them to invest. What percentage of your funds would you invest in SMEs? If you're talking of an informed investor, especially after today's session, I think it would be at least 5 or 10% more than what one would have actually allocated.
Most of the views, I think I concur, but a couple of perspectives, like the way we have been moving with merchant banking and dealing with entrepreneurs. I think we can segregate the entire investors community for SMEs in two baskets. One is the basket who move very closely with the entrepreneurs, the known circles basically, maybe vendors, customers, dealers, the distinct relatives, friends. So as of now, I think the more and more SMEs which are coming, probably the people who are moving along with the entrepreneur, they have the confidence in the entrepreneur. They know how the fundamental intrinsic value, the ethical value, the moral values, how the organization is doing, what kind of people are attached with the organization. So they have some comfort and they are the people who are kind of showing great interest. And probably those are the investors who are putting in a lot of their money in those kind of companies. But particularly for question number 2, that are present investors different from desired investors? From that point of view, if the market has to mature, then definitely the investors have to broad base in terms of capacity. So one set of investors is banks and financial institutions, as was talked about. But I think the other investors is more of angel investors, PE and VC, as Mr. Bala said in the earlier question. I think that those investors, if they get attracted, I think that will be the more kind of a broad-based investor category along with the known circles and the professional investors. And to attract them, I'll go 2 slides back. The question was that what are the regulatory measures which have been kind of being taken by the government? I think a lot of SOPs, tax incentives have been given, and with more and more SOPs coming in, a lot of PE and the so-called angel fraternity, which is not very organized in India as of now, but yes, people are now looking upfront and kind of getting organized for angel investments. So maybe, as was said, that we'll have to kind of experience as more and more companies come for SME listing. And as we have the population of, let's say, 200, 250, 300 companies, then probably we'll notice that, yes, the investors are getting broad-based. What investor base was there for, let's say, first 2 or 5 companies last year, definitely it has become broader when the company's population is touching 25 or crossing 25. So as we see more companies, definitely we are going to see more and more varied types of investors.
So thank you. So again, there are so many potentials to be involved in the capital market for the investor base, and including the angel investors. I think the angel investors should be more included in the capital market, the most official ones, so not the beyond the informal, private equity financing. And I think this one of the discussions might be this, so whether or not the social capital market is established in India or not. So this is also the suggested points to be discussed in the future. And the last one is a more critical issues of the factors. So this is the last discussion point. So critical factors to create a specialized capital market for SMEs in this context, the SME exchange under the BSE. So there are so many criteria. So for instance, the simplifying these listing procedures or simplify these disclosure requirements. So because the, for instance, SME exchange is a stock exchange market. So such a market so must follow these capital market laws and regulations. So therefore, the level of simplifying this level of requirements so one of these discussion points. And also the funding amounts. So because SMEs need a small amount of money actually. So so how much will be this most appropriate amount and for funding so for SMEs, so through the special equity market for SMEs. This is one of this discussion, minimum funding amount to be provided through this capital market. And cost management is also very important because these small-scale enterprises have companies having the small assets, and also if these market organizers like a stock exchange cope with these SME stocks and the shares, so definitely so each transaction very small and also the costly. So how to cope with such cost-related manners and management issues. And also settlement speed is also important. Usually, for instance, in the banking sector, bank credit, SMEs can rapidly get money from banks. So once the contract concluded with the banks. But in case of a capital market, settlement speed is critical matters or not. So for involving the SMEs. So this is one of the discussion. And also SME information and market literacy. Those are also these key issues to develop this SME capital market. What do you think about the disseminating this SME capital market in the future? So how to disseminate the information to the potential issues or not? So would like to know your opinions of the strategies about those issues. And one more thing, the important thing we get from the interview from other countries. Foreigners' participation in the semi-capital market. This is also one of the debates. So because SMEs hesitate to disclose their business and also of their financial conditions to other institutions, especially foreigners, because they are also worrying about being controlled by the foreign companies. So very worrying about this point. So what do you think about including the foreigners, the foreign investors, and the foreign issuers in this SME capital market? So, and the last one is for types of supporting infrastructure, like CPA network or something like that. So would be necessary to develop SME capital market. So those are the list. So I just come up with about the development of specialized capital market. So I'd like to know your frank opinion on that. Thank you.
I think this is a topic which is very relevant to the exchange. So as an exchange, we are a macro institutional infrastructure institution. So we provide the relevant infrastructure. And in some sense, the capital market infrastructure in our country is pretty much now at par or with world-class standards. And to a large extent, what we have done is for SME, we have not made it onerous. We actually made it a lot more simplified. And we could reuse and basically use the current infrastructure and leverage that to the extent possible. Like already Ajay in his slides mentioned that we're using our existing market platform, so we don't have to reinvent new members or new participants to actually look at training on this on the SME. They could virtually do it from the main platform itself. So its only thing is that it is basically earmarked as an M group or an MT group. So that's something which makes it simple. What we have done in terms of disseminating information is also most of the owners has been taken by the exchange. So what it has done is it has created portals and websites where easily the SME company's information can be flagged. All they need to do is file with us, whether they send us an email, whether they send us a fax, we will actually digitize it, we'll put it in a proper way so that it is available to the public at large. In addition, we also been employing professional agencies to actually do research on these companies and provide research reports which actually act as guidance to investors in terms of what these companies are doing, etc. Also from procedure perspective, the procedures have been simplified quite a lot for SMEs, unlike the main board companies. So one step of actually filing a draft red herring prospectus with the oversight regulator, which is SEBI, that's kind of been done away with. The only level which you have to do is with the exchange where you actually are listing. So you can, although the document has basically the same kind of content in terms of the disclosure requirements, etc. But the thing is the templates are all standard and it's something which the merchant banking and the investment banking community can provide off the box or out of the box to the companies directly. And even the financial statements, which normally are required on a quarterly basis, etc., they have been diluted to make it an half-yearly reporting so that it is less onerous and less expensive for this company. So that those kind of measures have already been taken. In terms of other measures which are possible, obviously we don't want to dilute the standards what goes to the investors, because we need to finally, end of the day, fine balance between what the issuing company wants to disclose and what the investor will want to be disclosed. Obviously, these are completely poles apart, and both of them, the issuer wants to disclose the minimum stuff, the investor wants to get maximum amount of information. So that right balance is something which we have been kind of striking, and to some large extent, we have taken the marker from the main board companies and diluted from that to probably at around 50% level to get the SME companies on. And so far, we haven't heard of any complaints from any of the issuing companies in terms of the procedures, that it is very difficult or very cumbersome to actually deal with. But definitely as an exchange, we will be continue to evolve. We'll continue to listen to the market participants, and at the end of the day, we have to bridge this gap in the most kind of amiable manner for both sets, the issuers as well as the investors.
I think a couple of quick points. We're running out of time, I think, but nevertheless, 2 points I'll pick up. One is foreign participation, and lastly, the one which appears kind of not very relevant is market literacy. One good part in Indian framework is that SME listing is on par with main board listing. So when it comes to foreign fundraising, the way the regulations prevail in India is that any company, Indian company wants to issue, let's say, GDRs or ADRs abroad, they have to be listed in India first. And since the SME listing is also on par with the main board listing, it's not a kind of alternative platform, it's the exchange platform which is applicable for SMEs. So even SMEs which are listed, although they are small, but they can also consider, going abroad and raise funds. So indeed, we are in discussion with one of the potential SME company which wants to have foreign funds raised, because some of the promoters, some of the stakeholders are from overseas. So I think I just thought that since the point was mentioned about foreign participation, I must make a mention that in India, if any company is listed on SME, the company can raise or can approach foreign markets. So that's a very good part about SME capital markets. And as we see more and more matured SME companies coming in for listing, I think we'll have those two-way fungibility kind of issues where the company is listed in India as well as abroad. And lastly, sounds very simple and plain, but I think the regulators have, or the ministry or the government has done their part to begin with. They have set up a system. And as Mr. Balasubramanian was mentioning that in India, probably we are not concerned with some of the issues like settlement speed, etc., because the very same systems of the exchanges which are there for years are applicable for SME markets. So those technology problems, those teething problems, those fundamental issues, probably I think India has learned out of its mistake of earlier OTC failures and other market failures, and they are now using the same systems and platforms which the BSE, NSE and other nationwide trading platforms offer for main board companies. So we don't really kind of are concerned with these issues. I think now the onus is on us, as the views was expressed, on merchant bankers, on the market makers, on the underwriters, the market participants, to have more and more kind of awareness spread in the minds of those traditional businessmen, if I can say so, kind of clear those notions which typically a businessman has in terms of what will happen if I go to markets. I'll be kind of subject to stringent regulations. How will I manage? What about corporate governance? My systems may not cope up. So I think those are the issues which now the onus is on the market participants to go across the markets. And we have, in fact, happy to share that BSE is very open, and we are kind of doing a lot of knowledge sharing events along with Bombay Stock Exchange. And to share one experience, like other day we were in a very small city in Maharashtra called Aurangabad. When we went there, Mr. Ashish was also there. We called a group of entrepreneurs. They are primarily from auto parts, because that is the belt where a lot of companies are manufacturing auto sector, components and supplying to the OEMs. So when that group of 5 or 6 entrepreneurs met and discussed, I think they were very excited. They were very excited, and the conclusion was that, but for that discussion or platform, they probably wouldn't have thought of SME as a genuine, good, available alternative. So the point is, I think the key will lie in the true execution of what has been laid down for last, let's say, 3 to 4 years in terms of the framework, the policy, the regulations, the platform. And of course, as the market is evolving, as we are getting along, we will see these newer and newer platforms. And I'm sure with you coming in and having discussion, we'll kind of learn more at all levels, regulators, exchange, and market participants. Thank you.
Thank you for these comments. So I totally agree with you. And also, I must add one more comment about this discussion. So because the list, the topics I listed here is actually closely linked to the primary market. And the most important thing is how to enhance liquidity. And so liquidity facilitation was also very important to make SME market successful. So for instance, already the market making systems that has been introduced in this SME exchange and the BSE. Such a kind of the liquidity mechanism is quite important to develop the SME capital markets. So I must add this point. Thank you. And if you have any questions or your ideas, please raise your hand. Also ask. Thank you.
See, all views are represented here of the investor and the intermediaries, including the stock exchange, the regulator, and the merchant banker. But I am one among to whom about you are talking about, SME. So, so far as the SMEs are concerned, since morning, and not since morning, for years I have been hearing that SMEs are unorganized, SMEs are family owned, and so on and so forth. So first of all, my views on these two things are, one, that family-owned business is no bad. In India, any number of companies you look at, I don't think, except 2 companies, one is the L&T and the other is ITC. Other than these 2 companies, all the companies listed on main board are family-owned businesses. So I think if an entrepreneur like me, who owns a company, doesn't make any difference, whether it is family-owned or non-family owned, Cargill, one of a very big company of America, which is something, has a history of 150 years or over 150 years, is yet family-owned. It has not come to share market ever. It is owned by two families for last 150 years or more and doing wonderful business all across the globe. The other is the unorganized. You see, when you talk of SME and you look at the SME, in India, I don't know why we are doing so, that we include micro, small and medium enterprises in that. Let me clarify to the August gathering here that the total number of MSMEs which runs in around 20 million in India, just 2% or plus little over 2% of the total number, they borrow from bank. 98% or little less than 98% of MSMEs have not borrowed from banking system, what to say of the capital market. Meaning thereby, only 2% of that 20 million count could only be the prospective incumbents at this platform. The number comes to 40,000. And gentlemen, I know business, I don't know finance, but the thing I know is that whatever equity I need to serve, I serve it from my post-tax income and not the pre-tax income, whereas I serve the bank's debt or any term loan out of my pre-tax income. And over and above, I have to pay the dividend tax. So meaning thereby, if I earn 40 paisa, I hardly have 15 paisa to distribute. So besides whatever the cost I am going to incur in merchant banker or the stock exchange or getting due diligence or getting rating and this and that, over and above, I have to earn 40 paisa for each rupee invested to distribute just a reasonable dividend of 15% to my investor. So not much of us are keenly interested. Well, no doubt. If you look at Narayana Murthy, even if you look at Mr. Anil Agarwal's today owns Hindustan Zinc, you look at Lakshmi Narayana Mittal, they all have passed through this phase of MSME. So, my idea to say is that many of us are in the line to graduate and to, become prosperous, to scale up our operations. Like Aurangabad you just talked about. You go to Pune. Even you go to Ichalkaranji, just under your nose. You will find the entrepreneurship of India, how decent coloring they are doing in Ichalkaranji. They are not dependent on capital market. But the SMEs who need, say, automobile ancillaries, and more precisely the service sector and the IT related companies who need much of the capital, because most of the assets they have is the intangible. Manufacturing as a nation, we don't have much focus, and manufacturing, I think, by and large, whatever SME does is not that lucrative, which can serve the capital. So by and large, it is a sort of self-employment in SMEs. So don't see that 10,000 or 20,000 listings are going to come, at least, I may be sounding negative, sorry to say, with due regard to all of you. I don't see 10,000 numbers touching in India in next 10 years. Because most of the SMEs don't need it. Well, so far as the present whatever the present system of SME platform is concerned, you see, first of all, I'd find no investor who can invest in me. If a Neeraj Kedia drops in somewhere in the BSC's building and say that I want to come up with a capital issue, I wonder any of them is going to invest in me. I have no visibility in the market, no brand. I'll come and stand up here and will say that, look, gentlemen, I manufacture XYZ product, or I extend this service and my company is growing like this and that. You see, there must be some project in front of me where I need to invest. And even if that project is good, who is going to invest in me? So the first person who can believe on me is my banker, because he knows me in and out. He knows my dealing. He knows how many check of my bounces. You see, somebody told me that if you want to check the reputation of anybody, talk to the supplier. How does he pay and how does he respect the supplier? So my supplier is the bank. I think if he vouches for it, that look, this company is good and I am putting just 10% stake in this company, probably each of you might start looking at me. So that is one thing which is missing. I think this platform is much needed. It should be successful. And the endeavor of all of us, rather since morning I have been witnessing that all of you are just trying to make it a success. Thanks to all of you. But thing is that for that, some concerted effort, primarily from government side is needed, which is directed flow of fund. See, when we teach a child, generally we use that kind of word, we use that kind of action which we expect him to replicate. So most of the, I know, couple of more minutes. So, thing is that first of all, we have to start this platform with some kind of imitation or some kind of artificial trading, and then gradually we will see that how does it take shape. And for that what you need is the fund, and fund which on the one side makes MSC to grow and on the other side keeps money safe, and in between bring the corporate governance and that kind of maturity. So that is all needed, but without investor or without directed flow of fund, our strong belief is that we may not get the desired result what we are looking at. Doctor, this is a small paper. I mean, we had some points which we had given to Mr. S. Ramanan. Last 30th April, he had a meeting in which our federation has extended one point. I'm just giving you that paper. I'm sorry it is addressed to Mr. S. Raman itself. So please don't mind. I'll mail you the other details also. Thank you very much.
Thank you. So you pointed out that only 2% of MSMEs have access to formal finance or bank credit, right? So which means the remaining 98% of MSMEs involved in this informal financing or just funding.
80-90% of them don't need finance.
Okay,
They are
but
basically self-employed.
yes, but this information was quite important to develop this SME capital market. So because there was a perception risks in the SME sector. So how to disseminate these benefits and these obligations of this SME capital market is one of the tasks provided by the government and the policymakers. So financial literacy on the SME capital market is important.
Not 2%. Okay. We should put that on record. Not this 2 crore micro enterprise. Micro means even 50,000 rupees, 1 lakh rupees, 2 lakh rupees. We are not talking about that.
In fact, most of the micro companies are largely IT startups. So they wouldn't get banking finance in any case.
for bigger companies. And that's why what he is talking about is that we have got 5,000 companies. With SME platform coming here and with his blessings, I hope that in the near future, we may see 50,000 companies coming. Now, out of 3 crore companies, what he is talking about, or 30 million companies, let me tell you, 25 lakh companies, that is 2.5 million companies, are in organized sector. Now, if you see us in existence for 140 years, out of 140 years, we have around 5,000 companies. So there is a huge gap that out of 25 lakhs, I think still there is a gap of 10 to 15 lakh companies which can get listed on this SME platform and take the benefit. He has given the example of Narayan Murthy. Infosys get listed when it was a SME company. It languished for years. And after that, you know, it has become a huge company. So instead of taking negativity from here, let us see the positive side, try to take the benefit of SME platform, see from larger picture, and then, you know, take it forward.
Just to add to Ajay, by the way, we all know Intel. Now, virtually every computer has an Intel inside, right? Including the Mac PCs. And that used to be a SME company in 1975. It was one of the first companies which was listed in NASDAQ as a SME. So basically, you don't know which of these bets are going to become bigger. Everybody needs to make the journey at some point. And to some extent, we are facilitating. It's like kindergarten, school, then college. And then you get to your working life. So it's simply a similar journey out there for the entrepreneurs and companies. So what we are trying to do is bridge that. Apart from secondary education, let's start focusing on some segment which can even tap the primary people. And that's what the SME sector is all about. And to a large extent, I think regulators have done their bit in terms of providing the right infrastructure, trying to give this push. Obviously, the financial literacy and the financial inclusion, that both these parts will happen over a period of time. And we have just begun the journey since last year. And we already seen 20, 25 companies in the first year itself. So obviously that pace is going to now pick up and become much larger.
All right, ladies and gentlemen. Am I audible? Okay. That was a very good interactive session, and I thank everyone for their inputs and active participation. As we are coming close to concluding the event, I would now like to invite Mr. V. Balasubramanian, Chief Business Officer, BSE Limited, to kindly present the vote of thanks.
A very good afternoon to one and all for being present here on the convention hall and giving us a patient hearing. I'm sure this session was pretty interactive. Obviously, the morning session we had Sri Raman, who was the Executive Director of SEBI. I would like to personally thank him. And also Mr. Shigeru Shinozaki-san for spending his valuable time and sharing his insights, especially from the Asian Development Bank perspective, in terms of whatever are the learnings within the Asian region, and for enlightening us with his views and making the discussions extremely productive. I would also like to thank Ajay Thakur for making presentation on the BSE, and I would like to thank my fellow panelists here, Mr. Ashok Kumar, as well as Mahavir Lunawat, for giving their opinions and valuable opinions on this particular subject. Primarily, I would like to say that I'm very happy at this point that BSE, which was basically the birthplace of the Indian capital market, is also leading the efforts in terms of the SME sector also, which is again a new initiative which has started just recently. Earlier, SME companies had to only rely on debt financing from banks or NBFC or access to micro kind of financing from unorganized sector or from families and friends. Now they have an access to the equity capital, and this is going to grow as we see, when we see more and more of the desired investors which you talk about in terms of angels, PEs, etc., because the right kind of environment is being created in terms of providing them the necessary tax incentive, ensuring that all of them come to the organized market, and we have a much more kind of vibrant kind of SME market which can be created. And I'm sure this discussion clearly threw some light on the importance of SME financing and how important this sector is for the overall growth of the country and also for the good of the country, because in terms of we heard some new concepts in terms of the social capital market and impact investors and those kind of things, which are definitely far more relevant on the SME segment here. And the Indian SME obviously has been in the spotlight now for last few years, and even the 12th five-year plan commission, five-year plan has actually put a lot of relevance on this particular segment. And we think that SME is basically the cradle for entrepreneurship and innovation, and that's something which is what is going to power the country forward in the coming years. And I'm sure that through listing, SMEs will not only be able to raise money, but also to increase their visibility, which adds to the brand and valuation of the enterprise. And on behalf of BSE Limited, once again, I would like to thank everyone present here for having taken time out and joined us at this significant seminar. With this joyous association, we are sure that we'll see a positive growth in shaping the SME sector. And we look forward to doing many such events across the length and breadth of this country. Once again, thank you very much.
Thank you, sir. To present the vote of thanks on behalf of Asian Development Bank, I request Ms. Denise Marian Supe, SME Finance Consultant, Office of Regional Economic Integration, to kindly come on stage.
Good afternoon. On behalf of Asian Development Bank, Dr. Shinozaki and I would like to extend our warmest gratitude to Bombay Stock Exchange, our partner for this study meeting. We'd like to thank Mr. Chauhan, Mr. Balasubramanian, and also Mr. Thakur, and your BSE colleagues for preparing this event. And we also wish to thank Mr. Raman for coming today, and also for all the participants for taking time out of your busy schedule to attend this study meeting and sharing your ideas and comments, which will be very helpful for our study. We would also like to thank the different institutions that have spread out our invitations: the Association of National Exchanges Members of India, Indian Venture Capital Association, Indian Angel Network. And also we would like to remind you if we could send back the questionnaire so we can better quantify and assess the situation in India, which is very critical for the study. So we can have a majority views of this situation in India. So additionally, we would like to thank again the participants for sharing the ideas on various discussion points, and to the panel members. And also, again, I would like to conclude this by thanking again Bombay Stock Exchange for their generous cooperation in this ADB study. And the inputs today will be together for the study that we are conducting on comparative assessment of capital markets in Asia, which we are targeting to publish or by end of July if initial target. And also this will be added to the Asia SME Finance Monitor that Dr. Shinozaki is setting up. So overall, I wish to thank all of you again, and have a wonderful afternoon. Thank you.
Thank you, Denise, and thanking everyone present here for your time.